Everybody will have their opinion on a lot of things, but I'm telling you right now, is pretty much the main part. Yes. What's going on? Listen, today we are going to learn how to read the chart and how to scalp the market, right? And I'm going to show you, the best way that I know how to read the charts. I've been doing this for 16 years. And if you're looking at the chart, right, and it's looking like, a whole bunch of squiggly lines or a whole bunch of candlesticks going back and forth and you can't understand what's going on, well, today, guess what? I'm going to help you on that, right? And I'm going to show you guys a live example of a trade that I took and, me making $4,000 on this trade. So we're going to show that later, but let's go to the first thing that I look for. So the first thing I look for, guys, when it comes to reading the chart is direction, right? Everybody will have their opinion on a lot of things, but I'm telling you right now, direction is pretty much the main part. And the reason why is if you don't have the direction right, honestly, everything else really doesn't matter. So most people, right, when it comes to looking at the market, they will probably look at multiple time frames. So they will look at the daily chart, right? They will look at the 4-hour chart, maybe the 1 hour, 5 minute, and they want everything to line up. And honestly, that's not a bad way to trade, right? But me personally, I don't do that. But let me show you an example of what I'm talking about. So right here, guys, this is NASDAQ, right? So if you look at the daily time frame, we definitely are in a uptrend, right? And if you look at this, right, the market just pulled back right here. And let's say that, we're looking at this chart and we see that the market broke out of this trend line right here and it looks very, very bullish. So if it looks bullish on the daily chart, right, and we go to, let's go to 4-hour chart, right, and we see that we're breaking this trend line and it's, making higher lows right here, and we go to the 1-hour chart, right, same thing, right, it's looking bullish, everything's looking good, right? And then we go to the 5-minute chart, which is usually the entry chart. So let's go to that 5-minute chart. So overall, right here, we have a nice breakout and we can look for a continuation to the upside, because now overall we have a general idea, or general direction where the market wants to go. So we just go to the 5-minute chart to look for entries. Now, me personally, I don't do this. Sometimes I look at that, but for the most part, I don't. The reason why is because I'm trading NASDAQ and the indices for the most part. So NASDAQ, S&P 500, the Dow, right, which is US 30, Russell. So trading those indices, they pretty much move the same. So I'm looking, honestly, it's almost like looking at one market. And if you go back to this example, let's go back to the daily chart. How many times are we going to really have the market lining up like that? Not that many times, because overall, let's say, for example, okay, we have a nice bullish trend right here, right? So we say, okay, I'm looking for longs, but what about this day right here, right? Which is the 4th. In our head, we're looking for longs because the daily chart is long, right? But guess what? That one candle basically produced this bearish day right here. So how are we going to day trade that, right? We can't. So the only way to day trade, in my opinion, is to focus on the 5-minute chart. So that's my main chart. The 5-minute chart is my main chart for direction, because on a daily chart, it could be in an uptrend, but we can have a 1 candle pullback, and that 1 candle pullback might be a downtrend on a 5-minute chart. So we have to understand that. So that's the first thing we need to understand. So the first thing is 5-minute is for direction. Now, how I look at the direction is very simple. Let's go to the chart. So right here, okay, all I'm looking for is a simple trend. And the way you can identify that, right, is we're looking for higher highs, which is this, right? The market's going higher, and higher lows right here. And basically the same thing if the market's going down, right? Higher lows, lower lows, I'm sorry. And, from there. So that's what we're looking for, guys, right? When the market is going up or down. Now, what I like to do is I like to plot a trend line just to basically have a good direction. You can also plot maybe a 20 moving average or a 50 moving average, but pretty much if the market is respecting that trend line and is still intact, in my opinion, the trend is up. Same thing if the market's going down. If the market is respecting that trend line, then guess what? We have a downtrend. So that's pretty much what I'm looking at. Now, you also have to look at reversal patterns. So let me show you that real quick. So let me just erase these real quick. So one of the reversal patterns that we're going to talk about today is called a head and shoulders. And honestly, this is pretty much one of my favorite reversal patterns. So we're looking for the market to go right here, do this right here, right? And basically something like this. So overall, we're looking for support and resistance, right? Now, resistance and support, pretty much you're looking for areas where the market sold off, right? Or if it bounced, we're looking for areas where the market reacted to that, right? And once it gets to those levels again, there's a possibility that the market might sell off again. So I'm gonna show you guys some examples so it makes sense. But right here we have the head, of course we have the left shoulder, right? And then we have the right shoulder. Now the right shoulder is lining up with that left shoulder, right? And this is where we can actually take a trade. Again, I'm gonna show you guys some examples so everything is gonna make sense. Now that's just the levels. Now when it reaches to those levels, we want to look for some type of confirmation. And what I look for, guys, is pretty much candlesticks. So let me show you guys the candlesticks that I look for. Okay, so these are the candlesticks that I look for, guys. It's very simple. Once it gets to a level, okay, we're looking for some type of bullish reaction if the market is going up, right? So we have a nice tail right here, and again a nice rejection right here, and a nice solid. So these are going to be like solid bars, pretty much closing right at its lows or highs. Okay, so that's what I'm looking at when it comes to the market. And I'm gonna show you guys some real examples. So let's actually go to that right now. Okay guys, so right here we have a clear uptrend. Remember I told you guys before, okay, we really want to go with the trend. Okay, so if the market is going higher, making higher highs, right, we want to go with the trend. So overall this day the market was basically making higher lows, higher highs, right? So let me zoom in so you guys can see. So overall, we have a swing low right here, right? Now, I'm gonna clear all this out. Trust me, it's gonna make sense. When it comes to the market, right, when you're dealing with these peaks right here, which are called swing highs and swing lows, these can actually turn into support and resistance. So this could be a demand area too. So I'm gonna explain that right now. So when we have aggressive buying to the upside and it comes back to this area right here, this could be a demand area, okay? A place where we can buy the market, right? So we have to have, number one, the direction, and number two, a level for the market to come back so we can actually take a trade. So it can be at a demand level or it can be at a support or resistance. Okay, so sometimes it doesn't really come back. Sometimes it will go all the way down to this support level right here, and we can actually take a trade right here. And I'm gonna clear this out so you can see exactly what I'm talking about. So right here we have a swing low and the market is bullish. So I'm only looking to buy the market, right? And notice how it basically found support right at that swing low multiple times. So I decided to take a trade and I went for a quick, pretty much 2-to-1. So let me show you guys the live recording real quick. So right here, you see that I'm in the market and I'm pretty much waiting for my 2-to-1 because overall, again, the market is in the bullish trend and it's hitting that support line. So I'm looking to get in. So I got in and I'm just looking for my profit. So let me fast forward this so you guys can see what happened next. All right, so right here you see the market is going to my target profit right there. Boom, I got out. If you look to the left, I'm up $4,136.50 on that trade. Okay, so what I'm gonna do is I'm gonna show you guys some more examples, okay, so you can actually really understand what I'm talking about. So right here, guys, right, the market is what, doing higher highs, and basically I'm looking to buy the market, right? So let me zoom in for you guys, right? So let me erase this, and now where do we want to buy? Remember, we have support and resistance, and we have supply and demand. Those are the two key levels that you want to focus on. Okay, so this is a nice demand level right here, and we do have support right here. So overall, this is a nice level right here. Now, notice how it hit this level and it reject multiple times. Remember, I told you guys I'm looking for a nice rejection bar, right? And that's what we have. We have two of them right here. Okay, so I went long for a nice quick pop to the upside, and I was done. So this is a good example of me looking at the trade, looking at the direction, waiting for it to come back to a key level, looking for a reaction at that key level, right? I'm just not getting in just because it's at that key level. I'm looking for some type of reaction, and then I'm getting in. So let me show you guys some more examples. All right, so here's the reversal pattern that we talked about before. Okay, the head and shoulders. We got the head, the left shoulder right here, the right shoulder right here. Notice how we have a nice double test, and we have a bearish bar right here. I went short, and I got a nice, I would say almost 3-to-1 out of this, and I was done for the day. Okay, so that was my trade, and pretty much we was looking at a key level. It was a reversal day, right? And I'm looking to get in, you know, right at that reversal when it's at that key level. So let me show you guys some more examples. All right, so this trade right here, it was a nice reversal trade. We was at support, okay? It was bouncing off the support right here. And also we have this left shoulder right here. So overall, to me, I was seeing a decent reversal pattern, right? So notice how we have that head. This is the inverse, right? So this is the same head and shoulders, but it's flipped upside down. So right here, we have a key level right here, which is support. And it's bouncing off that support right here. So to me, when it was bouncing off that support, and honestly, I wanted it to come back down here because we had a nice demand level, but didn't go to that demand level. It is what it is. It was holding support right here. It was creating some type of wedge. So to me, that was good enough. I was in the market and boom, I took this long, okay, for a quick scalp, right? And if you look at my P&L for that day, I made $3,345.50. Okay, so that was a nice quick scalp. Boom, done for the day. And just looking at reversals, right? Looking at the direction. So today was a nice reversal day where the market was coming at that. It was coming off support, giving us that left shoulder support, and I just took that nice breakout. So let me show you guys another example. So overall, this trade right here, very clean. We've making, lower lows, right? And we are at a key level, which is supply, okay? So we notice that we have supply right here. Again, supply is basically aggressive selling, demand is aggressive buying. So when it went to that supply zone, what do we see? We see a nice reaction. So we have a nice reaction, right? It went to that supply zone. Notice how we have, boom, 2 reactions right here. That's where I went short right here, right? And I was looking for nice 2-to-1, okay, on this trade, and I was done. So that's what I'm looking for every single day, right? I'm really focusing on the 5-minute chart, right? A lot of people focus on multiple time frames. Again, nothing wrong with that. It's usually good if you're looking at, a lot of markets. So let's say you're looking at the stock market. We're talking about you're looking at thousands of stocks, so you can break it down like that. Or if you're swing trading, right, and maybe you're looking at the Forex market and you have a whole bunch of peers you can look at, and you can say, all right, all the time frames are lining up, boom. But for a day trader like me that's only trading the indices, right, it's very hard to actually have everything line up every single day. So I'm focusing on the 5-minute chart, for everything, for the direction, entries, everything. So try it out, right? Back test this. You're going to see that, once you understand the 5-minute chart and only trade if it's a clear picture, you can definitely still make profits from just only looking at the 5-minute chart. You don't have to have, so many charts line up at the same time. So that's all I have for you guys today. Just take notes, back test, enjoy it. Trust me, this works. Just make sure that you do the necessary homework, necessary back testing, and go from there. All right, hit that like button, hit that subscribe button. If you want to learn more, check out the program below that I have for you guys. I actually have a sale going on, so check that out. And if you have any questions, comment below because I try to answer all your guys' questions. Thanks a lot for your time, and please have a great day.